technical analysis with the Dragonfly Doji Candlestick pattern, which has its neutral to bullish sentiment demonstrated quite well in this example, as price rebounds above it slightly while remaining relatively flat. From a bullish perspective, it would be preferable to see price remain above the low price of the Dragonfly Doji, and indeed a support range is found. The minor gap down is also filled, then with price now closing strongly over 750 with increasing green volume as well, the delay to the uptrend is finally over. So it isn't too unusual to see a bullish reversal take a bit longer with a Dragonfly Doji compared to other more bullish reversal candles such as the bull hammer. Nonetheless, the range that developed around the Dragonfly Doji becomes a useful reference for support defining a key lower boundary again and again. And like any range, it's not always going to guarantee price will be held up, though there can still be a minor pause before closing below it. Now pay attention to the gap down which is not being completely filled, because there's still major influence from the Dragonfly Doji reversal area, now reversing rolls to offer significant resistance. The next case begins with a Dragonfly Doji within a trend that's already in progress. It quickly becomes the most relevant support as the next bearish retracement appears. Part of this support range at the low near 96 also lines up near the opening price of an earlier gap down candle. This next chart shows what would in theory be a highly bullish situation. A Dragonfly Doji with a larger green real-bodied candle before and after it, along with gaps between the real bodies. Essentially one of the most bullish variations of a morning star formation that also benefits from higher green volume. Price even trades above the high. However, it's a red candle with bearish star and gravestone doji characteristics, along with increased selling volume as well, essentially cancelling out the bullish candles and sending price back down to its starting point around the lows of the Dragonfly Doji in the upper 460s, where support is immediately contacted to push price back up to the short-term highs approaching the 490s, where a slight incline is developing to gradually advance higher. As bearish retracements naturally emerge, the morning star centering around the Dragonfly Doji continues to be a useful reference for uptrend lines and more horizontal ranges of support during the development of this relatively large uptrend. Now let's look at a situation where price is in a range after a gap up. Recent support from a doji in a morning star upswing point runs through the nice round level of 220, which is nicely aligned near the closing price of the gap up candle. Price crosses under this level and there's a Dragonfly Doji with a slightly wider real body range than normal, followed by a large green real bodied candle opening to gap up and closing over 220, which as we've seen before forms a more bullish variation of the morning star. So price technically did close under 220, but that was only temporarily within the range of the larger morning star reversal pattern, which if all three candles are combined essentially makes a larger bull hammer. So those closes under 220 would have been part of the lower wick. And actually, if we look at the low of the Dragonfly Doji at around 215, it lines up neatly with past swing points after and before the gap. So that round 215 level near the low of the Dragonfly Doji neatly defines the lower boundary of the range revolving around the gap up candle. Next chart where once again there's a situation with a candle having features somewhere in between a bull hammer and a Dragonfly Doji in the middle of candles forming the morning stars structure. Now the chart gaps back down to the same level with a similar candle that's bearishly engulfed, making it less likely price will hold over the 137 level near the lows of these candles. Indeed, there's a defined break lower, which is actually part of a larger double top pattern, which ends up not making much progress but becomes a useful reference for upcoming resistance. there it is, price is being held down and pushed with a decisive bearish engulfing pattern. Though this drop is also temporary, the 137 and 140 levels still provide some resistance to slow down rising price. Roles are reversed and this area becomes a great support range, which of course won't last indefinitely, especially with a drastic increase in selling volume now. That results in only a temporary delay before advancing well under 137. A new Dragonfly Doji starting the next halt to the downtrend. Incidentally, its lower wick runs through around 130, which is from the low of this bullish reversal. Price rebounds, but it can't get over the upper 130 range. So it will be important for price to remain above 130, which it does not, leading to another bearish continuation and contributes to the long-standing resistance around these three levels. Another downtrend halted by a Dragonfly Doji, an unusually large one this time. Then the chart goes neutral to bearish, but then there's a bull hammer rebounding price off the 115 level from the low of the Dragonfly Doji. This bull hammer and its low become important later on, as they contribute to defining a wider range of support, which has been under some severe pressure but is still holding. Because although there have been several consecutive closes under the support range, all the candles that have gone under the 113 level have been spinning tops or dojis, which keep a neutral to increasingly bearish tone since their real bodies or upper wicks still maintain contact with the 113 level. The expanded 115 to 111 range becomes relevant when the uptrend is reversed by a hanging man candle, which is quite useful since price once again spreads over a wide range with increasing volatility around 113.